Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report where I will show you the best trading occasions on the market. We will analyze the market from the technical and fundamental point of view. So let's start with fundamental first. Let's start with the calendar. This week, this is our first daily analytical report this week. And the last, because for the weekend we're flying to Malaysia for the seminars, to run seminars there. So I'll try to show you everything today. This week will be important for the British pound, definitely. We do have many data for the British pound. We also do have, obviously, on Wednesday, we do have rate decision from Fed and a rate statement and a press conference. So definitely important for the American dollar. So calendar for this week is pretty packed. But let's start from the very beginning. So today in 28 minutes, we will have CPI from UK. Situation on the British pound is very good. Especially on cable, so British pound to American dollar, we do have a major buy signal, and it looks very promising. Hopefully for the buyers, if someone's buyer, if someone used this technical setup on cable, hopefully CPI will be better than expected, or at least in line with expectations. And the reaction itself will be good for pound, because, well, that's more probable right now. That's more probable because of the technical setup. So if the fundamental analysis and technical one will point in one direction, that's potentially a very nice trading opportunity. On Wednesday, we also do have data for the cable, for the pound, but Wednesday will be all about the interest rate decision from US. 2 hours later, we'll have interest rate decision from New Zealand. So really busy time on the markets. On Thursday overnight, we will have data from Australia, from job market, IFOs from Germany, PMIs from Eurozone, and pack of data along with the interest rate decision from UK. So retail sales and interest rate decision from UK, super important. And we will close this day with PMIs from United States. On Friday, durable good orders from US, CPIs from Bank of Canada, retail sales from Canada. So this is one of the busiest weeks this year. Actually, I cannot remember that this year we would have such a busy week. Definitely interesting. Definitely it is worth to be on the market this week. We shouldn't complain about the lack of volatility. Volatility should be with us for the whole week on majors, on the major instruments: Euro, American dollar, Australian dollar, New Zealand dollar, British pound, everything, Canadian dollar. So definitely a week to be on the markets. That being said, let me show you the technical side of the market, and I will start with Bitcoin. Actually, it is our first webinar since 9th of March. Where were we? 9th of March. We are here, so we are below 10,000. Straight after the bounce from $11,000 on Bitcoin, $11,200 for Bitcoin. That gave inability for the price to climb higher, because price climbing higher, climbing above this resistance would mean a strong buy signal. So inability for the price to climb there gave a bearish momentum and the price broke $10,000. Then we used 8,700 as a support, which was important. As you can see, support after the breakout, resistance, and eventually tested as a support. And most recently, 14th of March, a few days ago, last week, we broke 8,700, and now we are testing it as a closest resistance, and we are testing it with a flag. This is a flag pattern. Flag is a trend continuation pattern. So what we should see here is the breakout of the lower line of the flag, and price tumbling towards $6,000. $6,000 is like the closest aim for the price, and I think that chances that we'll get there. Price was resisting for some time, but this drop is quite strong, and chances that we'll break the lower line of this flag and that we'll get to 6,000 are very, very high. This negative scenario will be denied once the price will break the green area. If the price will break the green area or close above the green area, that will be maybe not buy signal, but let's say that price breaking the red area will delay the sell signal for some time and can create a nice opportunity for a short-term, mid-term upswing. Cable, I want to show you on cable very interesting situation, because we do have a correction quality pattern here, a drop 6,630 pips. This drop from the end of September till the middle of October, and the next drop, most recent one, from the end of January till the beginning of March, was also 630 pips. Those rectangles are the same. Let me adjust it here. Those rectangles are the same from this top to this bottom, from this top to this bottom. So buyers were not bothered to test the horizontal support or the long-term uptrend line here. That was a combination of those two. That was an excellent support, but buyers were not bothered to test it, and they did a correction equality pattern, and from this they created a hammer on a daily chart. That's absolutely beautiful by price action, bullish setup. And then the price went higher, broke the horizontal resistance here and a dynamic downtrend line. That's the upper line of the wedge, that's the lower line of the wedge. So wedge is a trend continuation pattern, so we should expect the bullish breakout. It was expected, it was anticipated, but the thing is that more chances were after the test of those supports. Price did not wait for those levels. We went higher faster. We broke this horizontal resistance, then broken resistance was tested as a support, but also in the midterm what we got is this wedge. The price broke the upper line of the wedge and went significantly higher. The closest resistance is here on recent tops. To this resistance we do have 300 pips, and this is an awesome trading opportunity. The thing is that risk to reward ratio, because if you're a risky trader, you can have short stop loss here, 50 pips. There are a few places where you can have stop loss below this area, or below this area, or below this area. So keep in mind that potential profit is 300 pips, right? Here risk to reward ratio is good, here is still good, but below this it's less than 2 to 1, so it's not the best. But I don't think there is a reason to go this low. I think like you can follow this green line, and that will be perfectly enough, and you should be safe with that. Next one, gold. All those three instruments that I'm mentioning at the very beginning are from Trading Sniper video, and these are the best occasions. So gold tested $1,307 per ounce again. How important is this level? Well, it was a resistance here, but look, I have something more for you. It was an ultra important level as well here, as you can see. It's the same level. I remember it because I think I traded this upswing. Very strong and very profitable. It was important here, 1,306, 1,307, and it is important again. Now, on a daily chart, looks super promising. Yesterday the price created a pin bar, 2 days ago the price created a pin bar. Here pin bar bouncing from a support, strong buy signal. In general, from the technical point of view, pin bar bouncing from a horizontal support, that is very good, that is very nice, and most of the traders should follow this. I would be more cautious here. Well, I'm bullish on gold, I love gold, but at the same time I'm a trader, so I need to get rid of any bias, and I need to look on the markets differently. I don't have any friends on the markets. Any instrument is my friend. I don't have instruments as my friends, so even if I like gold, I have to be a bit more critical. Here, that is a nice flag, a bit weird because it's very narrow, it's very thin. That's a very, very thin flag, that's a very weird flag. But what I would say that price, as long as we stay below the red line, there is no chance for upswing. Buy signal will be created once the price will break the red line, in my opinion, because for now it may be descending triangle pattern, and I know that descending triangles are usually seen after a downtrend, but descending triangle in an uptrend shows you that the bounces are weaker. Still, the bounces are weaker, so the demand is weaker. If the demand is weaker, that can mean a breakout. So far so good. We do have breakout, upswing, bounce from the horizontal support, and we do have a flag, a short-term flag, which is a trend continuation pattern. So we should see at least attack on the red resistance. But the thing is that as long as we stay below the red line, there is no legitimate buy signal. American dollar to Japanese yen, very interesting situation, because hopefully you can see that here, here, here. That's an inverse head and shoulder formation, not fully active, so there is no buy signal here yet. Buy signal will be created once the price will break this neckline, and to be precise, I think this horizontal resistance. So price being below this area is still negative. Price doing something like that, that is a buy signal, immediate buy signal for the Japanese yen to American dollar. I would say that this is a top which started drop, not this one, because here we're in a sideways trend, but from this top the drop started, and it would be beautiful with the Fibonacci's. So look, 23.6 is a neckline, 38.2, which is super important, is also a super important horizontal level from the price. 50, not so much, but again 61.8 is also crucial resistance here. So this on Fibonacci's looks awesome, looks really good. And well, not very often I find good setups on American dollar to Japanese yen. To be honest with you, I'm not a fan of this instrument. I think that there are much better instruments on the market, but once I'm gonna see a nice occasion, obviously I'm gonna respect it, and hopefully I will be able to turn it into profits. maybe. We will see. DAX. We had this bullish engulfing here. We had this bullish engulfing on the horizontal support that we are talking about. It brought us nice upswing. We are still higher, but it's not what traders were expecting, probably. The thing is that we defended $11,900 for 11,900, not dollars, points. This red area as a support, which keeps the bullish dream alive. But it's the recovery, the bounce is not convincing. And again, the situation stays the same, guys. As long as we are below the red area, the sentiment is neutral, but it's not negative. Buyers are defending still, but the breakout of the red area will be definite strong sell signal. Dollar index. On dollar index, we had a choice whether the price wants to create a head and shoulder pattern, left shoulder, head and right shoulder, and break the horizontal support, or the price preferred the symmetric triangle pattern here. Symmetric triangle pattern won and gave us few points. Stopped on a resistance. That was a good trade. But buy signal is gone. There's no more buy signal from the breakout of the upper line of the symmetric triangle. Who traded that? Then fine, fair enough. Who didn't? Well, that setup is no longer there. Now, because of the fact that this movement was not continued, we might get some problems here. We may get some problems, so we may get a situation where the horizontal support will be broken. So far so good. So there's no clear signal on dollar index. We have to wait. Breakout of the red area triggers sell signal. Breakout of the upper gray area, breakout of the green area triggers sell signal. Breakout of the upper gray area triggers buy signal. American dollar to Canadian dollar. Upswing, horizontal support. Most probably we're gonna test this horizontal support. We'll see what the outcome will be. Here we have a combination of uptrend line, horizontal support, so potentially that is a very nice buying opportunity. S&P 500. Slowly. Well, that's a sideways trend. It's not very interesting what we are having here. Definitely American stocks lost momentum. Those movements are choppy. They are not smooth like here or drastic like here, but they are choppy. That's a sideways trend for me. This kind of sideways trends. Sideways trend is the place where most of the traders, they lose money. Australian dollar to Canadian dollar. After making parity and testing it as a support, the price made a huge upswing, very beautiful one, very technical one, but now it's time for a correction. How deep this correction can go? Well, we have few patterns. We can use this correction equality, this or this, trend line. I think that the price may test this one because it will be close to the horizontal support. This one will be smaller because and would go in line with the uptrend line. Let me just change the color for yellow. Yellow is fine. Oh, I'm sorry. Not very visible. but yellow ends here on uptrend line. That would be the correction quality pattern with this one. What's this? What's the general situation here? So we should see the trend is positive as long as we stay above the orange area. Any bullish price pattern, any bullish candlestick pattern can be perceived as a very positive sign. FTSE. Well, FTSE created a major sell signal yesterday, right? So DAX defended horizontal support. They had a bad situation, but still were above the major support. But FTSE did not. Yesterday we closed below the 7,100 points for the first time since December 2016, which is remarkable. That was a very important horizontal support. It stopped the downswing at the beginning of January. Another one, another one, another one, another one. Then the price broke this support, closed the day below. Now we are about to test this as close as resistance. Well, actually we did. That's beautiful. Broken support becomes resistance, and that's a legitimate sell signal for the FTSE, like a long-term, very important sell signal for the FTSE. The potential target is here. In terms of the risk to reward ratio, this trade is absolutely marvelous. Oil broke the midterm downtrend line. We had uptrend line here, downtrend line here, so at the end we do have kind of a symmetric triangle pattern. We managed to break the upper line of the triangle, which opens us a way towards the new highs. Australian dollar to New Zealand dollar, new lows. I like that personally because I don't have a position there, but that's a nice technical setup, and I always appreciate when the market moves technically. Head and shoulder formation, left shoulder, head and right shoulder, breakout of the neckline, test of the neckline with a shooting star. And that shooting star was for me a super sell signal, like on a daily chart it looks like that, super sell signal here. Most recently the price created a symmetric triangle pattern here, here, here. Here. We broke the lower line of this pattern. We're gonna test it as a resistance. As long as we stay below the green area, the sentiment is negative. And price testing the green area from the bottom is a legitimate strong sell signal. If we will see a rejection of this line. American dollar to Swiss franc. Let me show you this, or this even. Major horizontal support, major. Finally we do have a breakout, but the price fails to go any lower, and instead of major downtrend we do have a reversal pattern, and this reversal pattern is inverse head and shoulder, left shoulder, head and right shoulder. Price comes back above the horizontal support, which creates a situation that it's a false breakout, and false breakouts usually lead to the movement in the opposite direction. So we break the neckline, we break the horizontal resistance, we are above the midterm uptrend line, and everything looks awesome for the buyers. But look what's happening here. That's a smaller head and shoulder formation. Here, left shoulder, head, and a right shoulder. That can be potentially dangerous, but the thing is that as long as we stay above the green line, the black line, the blue line, the sentiment is positive. And actually, American dollar to Swiss franc respects this formation very much. It was here, and obviously this one. So those head and shoulder patterns for the American dollar to Swiss franc, they seem pretty reliable. New Zealand dollar to American dollar, head and shoulder pattern as well. Here head and shoulder pattern was many times, like here, look at this, left shoulder, head, right shoulder, not the prettiest one, but this one is very good. Inverse head and shoulder, left shoulder, head and right shoulder, and after this, look at that, guys. When was the buy signal created? After the breakout of the green line. So breakout, stop losses on 120 pips, 500 pips upswing. Excellent risk to reward ratio. But now price creates an head and shoulder pattern, so the opposite to this one. The thing is that we are still above the neckline here, and only the breakout of the neckline can bring us a reversal. Maybe we need to adjust those. Yes, like that, or even like that. We are still above the neckline. As long as we are above the neckline, there is no buy signal, so we need to see the price breaking the purple area. Once we'll see the price breaking the green area, the purple area, that will be a major downswing, major sell signal, aiming at least the red area. Why? Because it was a resistance here and a support here. Let me show you the risk to reward ratio. So price closing here is 100 pips, 100 pips, 120. Not the best one on the record, to be honest with you, but maybe the price will create a small bump here, and the stop loss will be, you will be able to put stop loss closer, like here, 50 to 120. That will be much better. Euro to British pound. Oh, many head and shoulder patterns. Head and shoulder pattern here, and very important place because that was a breakout above the midterm downtrend line. So the same happened in case of American dollar to Swiss franc. So that was a false breakout above the pattern, and false breakout is shaped like a head and shoulder pattern. That's awesome. And we broke the neckline of this formation. Here we went significantly lower. We broke local horizontal support, then we broke the uptrend line. Then the price created a V-shaped reversal, but now we're coming back to the main trend. And I do have a position here, and actually I think I sold somewhere here, and my stop profit is already here, securing a few hundred euros or even 1,000 euro. But I have to wait for the outcome of this. It's already secured. I'm just gonna protect my profits further. I think here would be a nice place to close the position. I try not to do that. I try not to kill the position in a trend, but I think that price getting to the green area can trigger us a reversal. So I don't want to be on the market when the reversal will happen. I don't want to be too greedy. Just take a nice profit from this, and that's it. Silver broke the midterm uptrend line, but is still above the horizontal support. Breakout of the blue area will give us a sell signal, but there is another buy strong support here. So silver will fall, yes, will, if gold will break $1,307. As long as we are above, we cannot think about breaking orange support. So that would be it for now, guys. Thank you very much for coming to this webinar. As you can see, we talked about like 15 instruments, and we had many trading signals. That is why that is because the price is moving very technically at the moment, which is very enjoyable for me as a technical trader. So I showed you many technical setups, and I hope that you will be able to use it in your favor, and I keep my fingers crossed for that. And now we'll have a short break, and after that we'll have a webinar about basics of the forex market. So stay with us. Now a short break, and again half an hour webinar about forex basics. In the meantime, visit our Twitter account and our website.